Hey guys, welcome back to the channel. So today I want to touch on a subject that doesn't get discussed very often, and that is the dangers of passive investing. In particular, I'll be reacting to some recent tweets from none other than Elon Musk, where he voiced his concerns about how passive investing has gone too far. There's a lot to talk about in this video, so let's get started. Since the 1970s, when Vanguard created the first index fund, there's been an exponential rise in passive investing around the world, and for good reason. The simple low-cost strategy of just buying and holding the overall market has been a really successful way to compound your wealth over long periods, and is endorsed by investors such as Warren Buffett and Mohnish Pabrai. Since their inception, the total market for index funds has reached a massive $6 trillion, and the market for ETFs, or exchange-traded funds, has also exploded to around $5 trillion since 1993, which is pretty mental. I think the massive rise in both index funds and ETFs is due to one key reason, which I'll quickly discuss before moving on to the implications that Elon was talking about. But if you already know this stuff, then you can skip ahead to the next section. So I think the biggest reason for the rise in index funds was the lack of alternatives for passive investors. It's pretty well known that most active mutual fund managers charge a fortune in fees, and most of them fail to beat the performance of an index anyway, so it would make zero sense to make an investment in mutual funds. You also have the greatest investor of all time, Warren Buffett, telling us to avoid mutual funds, and that most people should just buy a low-cost index fund.
The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amount to, and it would come to $51 million now.
So overall, I think it's pretty obvious why investors opted to invest in index funds, because there was simply no better alternative for passive investors to put their money into. Now, let's look at the potential dangers for passive investing and see what Elon was talking about. So first things first, when I talk about the dangers of passive investing, I'm not talking about the cons for the individual passive investor. I'll more so be talking about the implications for the overall market in general, if the rise of passive investing continues the way it has been. So all of this started when Elon Musk, of all people, replied to a tweet from someone who asked $1 million question. What happens when everybody is a passive investor? The original tweet goes, according to modern portfolio theory, the most rational investment strategy is to buy the market. But the reason why the market reflects the fundamentals of companies is because active investors make it so. So what happens when everybody is passive? And Elon responded saying, exactly. Right before he died, Jack Bogle of Vanguard said index or passive funds were too great a percentage of the market, and he really knew what he was talking about. He goes on to add that there should be a shift back towards active investment, and that passive has gone too far. One of the issues with the huge growth of index funds and ETFs is how they're taking up a greater and greater percentage of the overall market, and there are potentially some implications that both Elon and Jack Bogle foresee happening as a result. If you don't already know, when you own shares in a business, you're usually entitled to vote on certain corporate actions. In general, most companies allow you one vote per share. However, there are some exceptions like Google, where some shares have voting rights and some don't. But for the most part, companies tend to offer one vote per share. One of the big implications with the rise of passive investing is the huge amount of voting power bestowed on massive institutions like Vanguard. It's not just that you're losing your ability to vote on company matters yourself, as you might not even care and you don't want the bother of voting on hundreds of companies. But it's the massive amount of power and influence being given to a small number of financial companies, mainly Blackrock and Vanguard. It's no secret that Blackrock and Vanguard essentially have a duopoly in their industry, and with that comes a huge amount of voting power. Shortly before he passed away in 2019, Jack Bogle warned us about some major issues in the coming era in an article he wrote for the Wall Street Journal in 2018. For those who don't know, Jack Bogle, the founder of Vanguard, is widely considered the father of index funds, and is credited with creating the first ever index fund which tracked the S&P 500 index. Now, even though he may have invented the index fund, he warned his creation may have huge consequences over the next few years. Right now, despite the massive growth in index funds over the last decade or two, most of the world's assets under management is still firmly in the hands of active managers. However, most economists expect that to change and believe index funds will rise above 50% of the total market value somewhere between 2021 and 2024. Bogle says that when this happens, essentially, the big three institutions would own over 30% of the US stock market, which gives them effective control. And he doesn't believe such concentration would serve the national interest. Bogle adds on to this by saying that if current trends continue, a handful of giant institutions will one day hold voting control over virtually every large US corporation. Not only will they hold an exceptionally large and dangerous amount of power across the general market, but according to Musk, they may also make decisions on behalf of actual shareholders that are contrary to their interests, and that this is a major problem with index funds. If you look at the top shareholders for most of the large companies in the US, you'll see the same three names over and over again: Vanguard, Blackrock, and State Street. And whether it's Apple, Microsoft, Tesla, or Ford, those three names pop up over and over again. Eventually, if the pattern continues, they'll have voting control over all of them. And I think this is what Elon meant when he said passive investing has gone too far. I read a crazy stat that since 2010, around 80 cents of every dollar invested in the US was invested in funds overseen by the big three, who now have a combined stake in S&P 500 companies of more than 20%. I don't want to seem like Chicken Little or anything, but I am curious to see how this plays out.
They call me Chicken Little. They call me Bubble Boy.
Let me know in the comments below what you think will happen with the big three or index funds in the future. I'm really not trying to on passive investing, and I do think it's the simplest way for most people to compound their wealth. But I am interested to see what happens in the future, and whether Blackrock and Vanguard will end up owning the whole world. I think the growth of index funds and ETFs will probably continue for the next few years, as they're still not really a viable alternative for passive investors to invest their capital. There is a third option though, which is what I think Elon was alluding to, and that is to become an active investor and choose your own companies for your portfolio. I know, if you've never chosen your own stocks before, it probably sounds really scary and something you can't do on your own. But honestly, it's really simple, especially if you're a passive investor and you already have a basic idea of how the stock market works. Being an active investor and doing well is simply just learning a framework from some great investors and then understanding it to its core and sticking with it through ups and downs. Great investors such as Warren Buffett, Charlie Munger, Mohnish Pabrai, and Michael Burry have generously shared their investing frameworks over the years, whether it's through annual letters, shareholder meetings, or online lectures, and it's all easily accessible for free on Google. I'm pretty confident that anybody in the world can be a successful active investor if they devote the time to learning the craft. If you're interested, I have a bunch of videos on the channel that you might find helpful. I cover everything from key lessons in Warren Buffett's letters, my personal checklist for finding long-term compounders, how to value a business, Michael Burry's framework, and many more. So if you want to become an active investor, be sure to hit that subscribe button. I recently hit 1,000 subscribers on the channel the other day, and I just want to say thank you all so much for all of your support. I really enjoy making content for you guys, and if even one person gets something out of it, then I'm happy. But this is just the beginning, and it's onwards and upwards from here. Next up, 10k. If you've enjoyed the video or learned something new, please consider hitting that like button as it really helps the channel grow. And if you've watched the video all the way to the end, thank you so much for watching. And as always, this video is not financial advice and I'm not a financial advisor. So please always do your own research before making any investment decisions. So that's it for this video. Thank you so much for watching and I'll see you guys in the next one.